Good morning. I'm tracking the Tampa commercial real estate market as the region navigates a period of measured economic adjustment. The Sunbelt's crown jewel is facing headwinds from elevated borrowing costs and inflation that remains stubbornly above target. But beneath the surface, there are distinct opportunities for disciplined investors. Let's break down what the data is telling us today. The broader economic backdrop matters. We're looking at a 30-year mortgage rate holding steady at 6.67%, with the federal funds rate currently estimated at 5.33%. That's creating a persistent spread that's reshaping capital deployment across the sector. Inflation, measured year over year, sits at 3.4%, elevated but beginning to show signs of moderation. The labor market remains resilient with unemployment at 3.7%. What this tells us: Tampa's economic engine is still running. Employment is stable. But cost of capital is a real constraint on new development and acquisition velocity. We're seeing deals that would have traded in 2024 sitting on the shelf today. Let's examine Tampa's development pipeline. Housing starts came in at 1,380 units for the most recent reporting period. That's a meaningful indicator of builder confidence, though it reflects the bifurcated market we're observing across Florida. Multifamily and industrial are seeing more activity than office. Institutional investors are rotating away from legacy office toward adaptive use projects and last-mile logistics. The office sector specifically is facing headwinds from persistent remote work adoption and sublease inventory that's still normalizing. But Tampa's residential market remains a bright spot. 3 trends deserve your attention as we move through the final months of 2026. First, capital stack restructuring. A number of 2021 and 2022 acquisitions are facing maturity or extension scenarios. Lenders are being selective. We're seeing mezz lenders and equity co-investors step in more frequently to recapitalize underperforming assets. This creates opportunity for value-add managers with dry powder. Second, tenant retention is driving value. With commercial real estate fundamentals under pressure, owners are investing in tenant retention and operational excellence. Long-term leases with credit tenants are being valued at tighter spreads. Here's what we're tracking at RipplEffekt. The Tampa market is no longer a momentum story. It's a fundamental story. That distinction matters enormously for allocation decisions. Commercial real estate in Tampa continues to offer legitimate value for investors willing to be disciplined about basis, capital stack, and exit timing. But the era of broad-based appreciation is over. Success now depends on operational insight, market segmentation, and access to accurate, current intelligence. Visit us at RipplEffekt.com for the full intelligence brief.